Welcome everybody to the special presentation of Winning Ways, put on by Wealth Information Network, featuring Wade Cook. We're gonna wait a minute or two as we let everybody file into the room. We have a really big group tonight, which is awesome to see. And while we wait for that, I'm gonna get a couple things going here. We do have at the moment chat enabled, and I'm going to get our outline.
Does everybody know that there's an outline?
They do now. Okay, so everybody should see that there is a click here to download button for the outline. And we have our buddy Brian from Kentucky. It's always good to see Brian.
Okay, everyone, this is what the outline looks like.
Yep, he's putting it up. Everybody should see both Wade and the outline up on the screen. So the outline is awesome. Rachel, one of our staff members here, puts that together, and it's both a PDF that is editable. So if you want to go in there and add notes, you can, and then save it on your computer. If you want to print it up like we have here in the office and write along with it, you have both of those functionalities. While that's up there, I'm going to get another thing up here because we have a ton of people on here, and I'm curious. I'm going to publish this. How many of you are currently WIN members? How many of you are visiting us for the first time or aren't currently members?
Put my hand up to see the
five
locals, and it's crazy.
Well, so far, let's see here. 33% are, and actually, I'm reaching across the screen here. We want to see polls. Here you go. Well, we got 50-50. Okay. And I have a feeling there's probably going to be a couple. Oh, see, there we go. Yeah, I was going to say. This one's actually, so longtime members are probably going to recognize a lot of what we end up talking about tonight. But we've been doing some really exciting stuff lately with weekly covered calls and 50-cent strike prices. And for those of you that think you might know what we've been up to, we're going to surprise you, I think. I'm going to do one more poll before I introduce Wade. And this other poll is, let's get an idea of how much experience you have in the stock market. Are you a long-time trader? Are you not quite as long, or are you brand new?
10+ years, up to 100%. Oh, there's some more people.
Yeah, there's some more people answering.
I was going to say, I don't think so.
And plus, we're probably a good 10, I think we're about 10 seconds delay. So keep that in mind if, while we have chat open, if we end up, if you say something and there's a little bit of a delay for us to get to you, that's why. Well, look, we've got some experienced traders, which is actually kind of nice. I mean, even if you're brand new, this is going to be something really exciting for you, I think. But even for you longtime traders, I think there's a lot of good information here. So it is my pleasure to introduce Wade Cook. For those of you that don't know him, Wade's mission in life has been to help people grow out of their problems. Really, I mean, that's when I think about Wade, that's the number one thing. He helps people grow out of their problems. And he does that by helping people build up a grouping of assets, and with those grouping of assets, figure out ways of having monthly income so people can retire, quit their jobs, go do those things that they actually want to do in life. So with that, I'm going to turn the time over to you, Wade.
Okay. We're using the same microphone. I got a bad habit, everyone. Usually when I'm with in a seminar setting, a bunch of people sitting in the seminar room, I'm able to walk out and keep my head up and all that. When I bow my head down a little bit too much, I don't know, I get something caught in there and I start coughing. I hope that doesn't happen tonight. I'm going to try to keep my head up. All right. So this is the outline. If you don't have it yet, you should get it. I like taking notes. I like printing them out, but other people, you know, each one of these boxes is now a PDF. What did you call it?
Yeah.
Where you can just go in and type right in the box. You'll have a hard time drawing a house like this, but you know, you can do that. I really believe that the weakest ink is better than the best memory. So if you're going to really gain a lot, I hope that this is a good stepping stone for you, a good starting point. And So let's just go ahead and get going into the outline. If you're just joining us, we have some new people coming on. Do they see right away, Brandon, where they can download the outline?
Yep,
is it right there?
Still up.
Oh, it's still up. Okay, so just go ahead and get the outline. Let me introduce myself. Kind of what I'm got famous for, which I get introduced at conventions and seminars, as Wade Cashflow Cook. That started a long time ago, back in my taxi days. I was a cab driver in Tacoma, Washington. I'll just give it to you briefly because it is important to this event and it's important to you that you understand to whom you're listening right now. I learned almost the first day that the money, this is my secret to driving that taxi. And by the way, once I give this to you, you can cancel your trip to Nepal, go see the Maharishi Money Man. Now, you won't have to do that. Here's the secret that I've discovered. The money is in the meter drop, which means to make a whole bunch of money in bite-sized pieces. Like in the taxi down in Tacoma, we could wait for that SeaTac airport run, $35, $40, or you could wait half a day for that, or even a day to get one of those runs. Or you take the $3, $6, the $9 runs. And that's what I did. I beat that cab to death. And they knew I would run for all the crazy runs and I would just pound that. And, you know, my foot was always down on the floor. I was screaming across town. And I got all those $3 and $6 runs. Now, what does the meter drop mean? You know, you've been in a taxi. Nowadays, they just push a button. But back then, had the, you know, go down to the 3 o'clock position, then the 6 o'clock and the 9 o'clock, but mostly down to the 3 o'clock position. And every time somebody got in the taxi and I put the handle down, it was $1.50. Then later it was $1.80. But $1.80 just to get in the taxi, whether you go 1 mile or 20 miles, it costs you $1.80. So I just thought real fast, if I could get 20, 30 of these runs a day, as compared to some of the other cab drivers getting 3 or 4 runs waiting for the bigger ones, I'd make a lot more money. And I did. I got to tell you, there were about 30 cab drivers at that time. And they were all sitting around bragging one time about how much money they were making. I was making $800. I'm making $1,200. My lowest month in my first year of driving a cab was $3,200 a month. And I sat there and I listened to all these guys talk about making $800 a month and bragging about it. I said, boy, yeah, that's a lot of money. I wish I could make that much. No way was I going to tell these people how much money I was making. But what that meant was I could take that money. I was living on, you know, about half of that. I could take that money, save up for a little down payment, $3,000 or $4,000 or $5,000, and buy a rental piece of property. That's what I really wanted to do, is be a real estate investor. Well, I ended up at the end of the year owning 9 rental houses. You know, I did my financial statement. You know how you take your assets and your liabilities? I was worth, then there's your net worth. I was worth $120,000 on those properties. And then a $65 electric bill came due, and I didn't have the money to pay it. I said, this is crazy. I've got all these equities, but they don't mean anything in terms of cash flow or paying the bills. And I decided right then that I was going to do something totally different. Everybody was telling me, no, 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 don't do this. But I ended up selling a house. Well, I was 29 when I was 27 when I got started, and I was able to retire at the ripe old age of 29. I had so much money coming in. I wrote a book called Real Estate Money Machine. By the way, can I tell you where that was 1980. We're talking 37 years, 27, 30, how long ago was that? 37 years ago. And my book is still out there. It's still doing well. You know, when you drive down the street and you see all those little signs that say, I buy houses? That's me. That's right out of my book. How many of you heard the word flip, as in flip a house? At first, people used to call it cooking a house after my last name. But you will never see that word flip in any book ever before 1980, because that's what I was doing, was flipping a house. I buy a house on Monday, fix it up Tuesday and Wednesday, and try to get it sold by Friday. Matter of fact, that's the game I played. How much can I make by Friday? That's going to play into tonight's presentation when we talk about weekly options with Friday expiration dates. But how much can I make by Friday? Oh, Mr. Cook, this house it'll be really good on April 15th. No, how much can I make by Friday? Mr. Cook, this will be a long-term hold rental price. I said, no, how much can I make by Friday? I had to get everybody around me, my real estate agents, everyone, to just kind of notch up their game a little bit. And I was in the business of buying and selling and creating notes, mortgages that I carried back, and I was able to retire. When I did that, I had $5,400 a month coming in. I did several hundred houses over the years, right? Well, that was my first start. So that's me. Now let's talk about you, and let's talk about people in general. Point number one up there, it says there are three ways of getting to be wealthy. So when you look around, you say, how did most millionaires get to be millionaires? Well, for years and years and years, they did it one of two ways. One way is they used the law of leverage. They would go out and they put down a low down payment, right? Maybe buy a $200,000 piece of real estate for $5,000, $10,000, $20,000 down, and then pay it off over the next 25 or 30 years, right? So they would get in with a low amount of money and then use hopefully the income from the property to pay it off. Well, that's one way, and real estate has been famous for that, because hardly any other place can you put down a small down payment, right? And as you see in this next box here, it says that the three benefits of ownership are cash flow, tax write-offs, and growth. Well, with real estate, you can do that. You can get cash flow, tax write-offs, and growth. But I got to ask you a question. What do you need more of? What allows you to quit your job? What allows you to pay off your bills and get out of debt? What allows you to travel and visit the kids? What allows you to retire better? It is more income. All right, well, let's go back up to making millions, all right, before we think about mundane stuff like $3,000 or $4,000 a month. Let's talk about making millions, all right? A second way was that you would take a little bit of money and go buy a business. I don't care whether it's a Subway franchise or whatever that business is. You would do that, and you'd build it to be worth millions of dollars. Well, I got a question for you. Have you ever done that before? Do you know anybody that has done that? I'm going to venture to say, you've heard of them before, but I'll bet you don't know anybody personally. Hardly anybody has ever built a business from scratch and built it up to be worth even hundreds of thousands of dollars, let alone millions of dollars, right? But those have been the two ways. And most people choose this way. They even buy a business with a small down payment and pay it off, right? But the point is, if we want to build wealth, and I'm not saying you do, right? Because a lot of people don't. They get turned off by money. But I'm saying cash flow, monthly income makes your financial world go around and around. All right. There's another way, what I call the secret of the third way, and it really is a secret to me. It is simply this. What would you say if I could show you even tonight how to take, say, $30,000? All right. Can I tell you why I'm using that number 30,000? Do you know that if you built up and you had $1 million, and you were to take that $1 million and put it in a bank, how much at today's interest rates, how much you would get? When I first started teaching seminars, a savings book rate was 4.5%, 5%. Well, that was pretty cool, because at 5% interest, you'd make $50,000 a year. But today, even with some better CDs, you're able to get half of 1%, 1%, 2% is almost unheard of. Well, 1% of that, an interest rate would be $10,000, not $50,000, but $10,000. Can you believe that? You work your life away to get $1 million, and then you take and stick it into your favorite lending institution. And after a whole year of having your money sitting there almost dead to you, they're willing to give you $5,000 or $10,000 in interest? No. What if we could take 30,000 and have it produce, say, $1,500 or $3,000 a month? Now that'd be 8, 9, 10, 12% a month, cash on cash. And I'm going to show you how to do that, but you need to come with me and really get this. So let's go back to our real estate example. In real estate, again, you can get the cash flow, the tax write-offs, and the growth. But again, I think for most of you, you need more cash flow. So to me, that is what real estate is good for. And yet there are so many seminars that teach, well, this is a tax deductible thing. This is for long-term growth. The people that are attracted to me, that are attracted to my books and my seminars, they don't need long-term growth. They need money to pay the bills this Friday. They need money to get out of debt now. They don't need to wait for an investment to mature. But now I want you to think about something. I believe that real estate can generate the cash flow for us. But can you imagine a jewelry store without customers? Can you imagine a mall operating with all of its stores without people coming in and buying things? Can you imagine a piece of rental real estate with no rental income? What would happen? See, almost every form of business has income. Most forms of investments do not. Diamonds, gold, art, antiques, art, all these different forms of investments, where's the income? I love gold. I think you should own as much gold as you can. But you can have all the gold coins sitting somewhere. They're not producing any income. So again, if most people need income, they need cash flow, that is where I have, as an educator, that's where I've spent my life, showing people how to build up income. All right. Now, I don't know how much, but my goodness, if you could take that $30,000 and make $3,000 a month, that $30,000 could produce easily the $10,000, the $20,000, maybe the $30,000 for a year. Well, let's test it. Test me. We go through the rest of the seminar and let's see if we can get $30,000 making, I don't know, $2,000 or $3,000 a month. All right. Wouldn't that be nice if you could learn how to do that? And I'm talking cash on cash. Now, the only way that that's going to happen in the stock market is to get income from an outside source. And there's a perfect way to do that. A way that's pretty much overlooked by everybody else, because it seems to me that there are so many stockbrokers and big mutual fund managers, and they think that they can get your money, manage it for you, give you a 1.5%, 2%, 3% return. You know, some of them get bragging rights if they get 5 or 6. Time out. Per annum for a year. You know, they can brag all day long. If they can get 9% on a mutual fund, right? But it's still for a year. Well, I'm suggesting that some of you tonight, I don't know if you've got the guts to do it. I don't know if you can learn it. I'm going to be here to help you. But, you know, that's a test. Can you do it? Can you take $30,000 and make $3,000 a month, or say $30,000 a year? All right. There's a way in the stock market to do that. It doesn't meet the eye, but we're going to show you right now. And I'm going to start once again with a real estate example. You can tell my first love was real estate, right? Let's say that you have a house, a property, and it's worth, say, there's your little house right there. It's worth $240,000, all right? You find it. You want to buy it, right? But you don't have, and you don't want to get financing for it or anything else. So you go to the owner and you say, how about if I give you an option? I'll give you $5,000 cash right now for the right to buy your house, say, within 6 months. So within 6 months, I'll fix it up. I'll do this. I'll do that. I'll get financing. I'll find another buyer, whatever. But I'll give you $5,000 now. Where's your risk? Because let's say that you have 6 months to operate. You have 6 months to do something, right? So what is your $5,000 purchase for you? Time. And maybe what time will do to that property. But time goes away. Anytime you have an investment that has an expiration date, there's a new added risk that you take because it expires. So let's say you come down 5 months, 5.5, 6 months, you can't get new financing, you can't get the deal done, you can't find another investor. What's going to happen? On that expiration date, that 6-month expiration date, you're going to lose your $5,000. Now, even a month or two before the expiration date, let's say that that house is in a great neighborhood and you can show people that all fixed up, this house is going to be worth $350,000 up to $400,000. And you go out to investors and here and there and everywhere, and you say, look, I got a right to buy this property for $240,000. It's worth $350,000 or $400,000. Could that $5,000 be worth more money? Yeah, it's just a piece of paper, right? It's going to be like a stock option. I'll get there in just a minute. But that $5,000, you don't have to sell the property. You could sell the $5,000 right to buy the property, right? Now, though everything I just explained to you happens in real estate, it doesn't happen that often. I've done hundreds of deals. I've been around real estate almost my whole adult life. And it happens, but very infrequently. You know, real estate options are just not that popular. But stock options, millions of people, 63 million Americans have brokerage accounts. 24 million of those trade stock options. All right. So let's go down that road. Let's convert this real estate example. We'll go to the top of the next page. But before I do, I want to tell you one of the lessons I've learned, right? I learned this from a friend at church who was also a lawyer. And he said, Wade, he saw what I was doing. Taking money, buying this property, fixing up, selling it, sometimes using the profits from the next sale of a piece of real estate to buy the next one or the next two, right? I was just so busy. You know, I was 27. I retired at the ripe old age of 29. By the way, I just turned 68 2 days ago, right? I haven't had a job working for anybody since I was 29 years old, 27 actually. And I'm not saying that to brag. I'm just saying I learned some lessons that are powerful. A lot of you watching right now, you probably can't live very long. You know, you couldn't even exist thinking about not getting a paycheck, 2 Fridays from now. It makes me sick. Thinking about getting a paycheck from somebody, I don't like it. I want to make money according to what I do and what my investments do. So the lesson I learned was this, and hardly anybody does this. Spend the profits, not the principal. Whatever you start with, $3,000, $5,000, $20,000, try like crazy to keep that intact and have that grouping of money spin off income. Now, I want to take just a minute, and I need you to look at my hands. I'm going to have to get them close together here, okay? When you're investing, there are really 2 choices. You acquire assets, right? Build up assets, or you build up income. Assets or income. Which one for you? Pretty much everywhere I go, every seminar I teach, there's people all over the audience, the room, they want to acquire assets. Well, there's a lot of assets out there that don't mean anything in terms of going to visit the grandkids, paying off your bills, living a better life, having a better and greater retirement. Assets or income. See, for most of you right now, you think about assets or income, do you realize that for most of you listening and watching right now, you're your only asset? You've heard the term income producing asset. For a lot of you watching right now, you are your only income producing asset. And if your asset doesn't go to work, there's no income. What I've tried, as Brandon, when he was introduced to me, said, I want to show people a way of building up a different grouping of assets that will spin off the money that they need to live on. All right, having said that, let's turn the page 2, but I want and go up to the top, and we're going to talk briefly about stock options. It's not a form of leverage, a stock option, but it acts like leverage. All right, so let me give you the definition. If you're taking notes right now, write this in. I'll go slow through this so you get it. A stock option is the right, a call option. We're going to talk about calls mostly tonight. The right, but not the obligation, to buy a stock at a set price on or before a set date, a certain date. Okay, let me say that again. A stock option gives you the right to buy a stock at a set price. Now, you do not have the obligation to perform. When you buy an option, you have a right, but not an obligation to perform. You don't have to buy anything like some futures contracts where you have a contract where you have to purchase something and they can force you into purchasing something. No, this is just a straight stock option, right? And they are really popular. Why? Because of, I'm going to give you the sentence right here, but I'm sorry, it's right here. Okay, here's why stock options have become so popular and why you should be excited about them and why you should be leery of them. And I'm going to show you a different, hopefully a better way to trade options, all right? Here's the reason why so many people get involved in stock options. Here it is. When there is a small, is that right? I can't hardly read that, Brandon. A small movement in the stock, there is a magnified movement in the option. Okay, let's put some numbers to it. This is really important, everyone, because once you understand that, you're going to understand why people are excited about options. But then I'm going to show you why most people lose money with stock options. Okay, here's our example. We have a stock. Sorry. I got a really cool brand new pair of glasses. Right? I love them because I had the bifocals, but I had it set exactly perfect for working on my computer. Up till then, I had these different glasses. I was always going like this trying to see. So these are pretty cool, but stick with me, okay? Here we go. You have a stock that's at $25, all right? And we look at the $25 strike price. That's the price that you're agreeing to buy the stock at. Now, options are always in 100 share contracts, unless there's been a weird stock split. But primarily 10 contracts, one contract equals 100 shares. All right, so let's use this example. You call your broker and you say, well, I like that stock, and this could be MU, this could be Intel, this could be General Electric, General Motors, right? That could be anything, right? How much is it's $25? Okay, well, how much is the right to buy it at $25 out in a month or 2 or 3 weeks or maybe 2 or 3 months? And they punch up the different expiration dates and they say, well, right now it's $1.30. Well, let's look at that, $1.30. So you would enter the trade at $1.30 if that's what you wanted to do. 10 contracts, 10 times 100 would be 1,000. You with me? 1,000. 1,000 times $1.30 would be $1,300. So you give your broker, plus commissions, you give your broker $1,300. Now, what have you done? What have you done? You have purchased the right to buy 1,000 shares of that stock, the one you're looking at $25. My goodness, think about what you control, right? And if that stock goes up, let's look at it. If that stock goes up was what you thought, you studied it, you looked at it, you really think it's going to go up, and the stock goes up to $26, that $25 strike price is now going for $1.70. Let's say there's 2 or 3 or 4 days. My goodness, how many of you know stocks that go up and down $1 or $2 within a day or 1 or 2 days? The stock goes up to $27, right? That option is now going for $2.40. We're going to come back. That's going to be the one we're going to get out, right? As the stock continues to go up, there'll be the amount. It's always going to be worth the amount down to the strike price. That's called intrinsic value, right? Let's stop there. The stock goes up in 3 or 4 or 5 days or 3 or 4 or 5 hours, and your option, you call your broker and you say, how much that $25 call going for on XYZ stock? And your broker says it's $2.40. You say, okay, go ahead and sell it. All right, let's take a little time out here. You're sitting at a red light. You got your broker on the phone and you say, let's go ahead and sell it. Let me tell you right now, this is one of the reasons I love treating the stock market like a business, because I'm not saying it's easy to make a profit. It's very difficult, but functionally, it's easy to operate, right? You know how long it takes for your broker? You say, I want to go ahead and sell that one for $2.40. And it goes, okay, hang on. You're still sitting at the red light. Hang on. Okay, wait, yeah, we got filled at $2.40 or $2.45 or whatever. You know what the average is? 18 seconds. You tell me any other business. I love Snickers candy bars. If I could figure out a way to do right there what I just did with Snickers candy bars, I'd die and go to heaven. That'd be the best thing. Figure out a way to sell a piece of real estate or a dress or a pair of glasses, bifocals. Figure out a way to sell those in 18 seconds and you got a deal. I don't want to talk to you if you can't figure out a way to sell something in 18 seconds, because that's all that I want to do. I don't want to be locked down, tied down, right? I'm not saying it's going to hit 240 and you might have to take 230, but let's go to 240. If you take in 240 times your 1,000, that's going to be $2,400. You have seen now in 2 days, 2 weeks, 2 months, whatever, you've seen $1,300 turn into $2,400, right? That's $1,100 profit. Wow. Guys, I've made millions doing this. And I've lost some too. But you know what? Most people don't. Most people do not make money with straight options. They can talk up a good story. You can go to, this is a call option. You could go to some seminar and they'll say, oh, we'll show you how to make money in both kinds of market, when a stock goes up or when a stock goes down. You know, I got to tell you about what happens when I show up to those seminars, right? Well, let's look at this. If the stock goes up, you're going to make money. Maybe not too much. What if it goes up, but it goes up slowly? Now, guys, I just got you all excited about stock options. Now I want to get you unexcited because most people lose. Let's show you where they lose. If the stock goes up, but it goes up slowly, it goes up over a long period of time, that option, the right to buy the stock at 25, could go from $1.30 to $1.10 to 70 cents to 40 cents to zero, right? It's got to go up, and it's got to go up quickly or you're going to lose, right? If the stock goes down from 25 to 24 and doesn't recover, you're going to lose all or part of your money. If the stock stays the same, if it stays right there at $25, right, you've got a right to buy it at $25. That $1.30 is going to go down to 90 cents, 60 cents, 20 cents. Well, let's say you get out then. I can't lose any more money. I want out of this thing. 18 seconds, right? Call your broker, sell it. And he sells it for 20 cents. Well, how much is 20 cents times 1,000? It's $200. So if that stock goes down or even stays the same, you're going to lose all or part of your money. And yet there are people that just tout these options. I'm good at them, but my goodness, most people are not, right? So let me take time out there. I want to show you something that I do. There's a couple guys on TV right now. I'm not going to use any names, but they're my old students. You know, it's amazing. I've been around a long time. 2.5 million people have bought my books and come to my seminars, right? I had 80,000 people paid between $3,695 and $4,295. 80,000. That's over $300 million that I took in sales. All right. I've been around the block. You know, you can't tease me about making money and investments and what it does. I've done about 29,000 trades. I've done about 10,000 of the 29,000. I've done about 10, maybe 11,000 on writing covered calls, which we're going to get here in just a minute. But I go to their event and they're up there talking about selling a $4,000 or $5,000 seminar. I watched a video conference with one of them today, and that's what they were selling. I spent an hour watching this to see what one of my old students was now doing, seeing if he was doing me good, doing me justice with what I taught him. And now he's out probably making more money than I'm making right now. I don't care. Because I go to their events and I say, will you show me your trades? Oh, no, we don't do that. Well, excuse me, you want me to give you $5,000, $49.95, and I can't see your trades? No, as a company policy, we don't do that. Well, can I see the company's trades? Do you have a brokerage account for the company? No, we don't do it. What about the owner of the company? Can I call him and see his trades? I mean, I'm willing to give you $5,000, but I want to see what kind of money you're making, right? I want to see your profits, your losses. I want to see everything. I want to see what you're learning and how you're growing. See, to me, everyone, it's really a wise person that realizes the need for an extra source of income. If somebody's willing to show me how to make $5,000 or $10,000 a month, heavens, I'd give them $5,000 cash one time. What I know about covered calls right now, what I know about the stock market, I would have paid somebody when I first started $100,000 to teach me what I know now. But I say, show me your trades. Can I see your trades? Nobody. Well, I want you to know, Wade Cook, Wealth Information Network, we show our trades. We put out a weekly report. It's what's called $1,000 Thursday. Matter of fact, today's Wednesday, and I was preparing it all day today for the one that's going to go out tomorrow, right? You can see what we do. You can see the trades that we're doing. We're going to buy the stock at this. We're going to sell this. We're going to get out at this price, right? Show me anybody else who will show you their trades. I don't think you could find one, right? And boy, if you want to criticize me, I'll give you all of the numbers, all the deals that you'll ever want to criticize me, because I'm not perfect, but I'm in the trenches and I'm doing real deals. And I don't know if that's important to you, because people ask me all the time, well, Wade, you're going to show me all this cool stuff. Can I do this on my own? The answer, yep, you can. You can do this on your own. You don't need me. You know, what do you need 29,000 trades for? What do you need that kind of wisdom and experience somebody gains in the market? Answer, well, you need it to keep out of trouble, for one. You needed to learn the intricacies, the ins and the outs, right? Again, it's a wise person that realizes the need for an extra source of income, but it's also a wise person that realizes that they can learn through the experiences of others. You don't have to learn everything on your own. You don't have to make all the mistakes that I've made. I've been around a long time, guys. I've got hundreds of books that I bought over the years. The most I can find are writing covered calls, which we're going to get to here. It's like 2 or 3 paragraphs and a whole book, a thick book on stock market investing. In my first book, Wall Street Money Machine, I had 4 chapters on writing covered calls. So we're going to get there in just a minute. But let's get back up here. What's the summary of all this? Why don't most people make more money? And it's right here. I don't know if you can read that. 1/2 of 1 of 3. Let me explain what that means. See those 3 things that can happen? The stock can go up, the stock can go down, or the stock can go sideways. You are only going to make money if you buy a call option. And if you buy a put option, everything's the opposite of what I'm saying. But if you if you buy a call option, excuse me, I just get too excited. If you buy a call option and the stock goes down, you lose. If the stock stays the same, you lose. If the stock goes up, but goes up slowly, you lose. The stock has to go up a lot and quickly, or you're going to lose. So can you control any of that, by the way? I'm going to show you how to control the other side of that trade in just a second. But you're going to lose. So of these 3 things that can happen, only this one here, 1/2, if that goes up quickly, 1/2 of 1 chance in 3, 1/2 in 1 of 3 of making money. This is why so many people lose money in the stock market. Remember, we used to hear about all these day traders, and they go into these brokerage outfits and sit on the other side of the wall. Yeah, what was the average was like 19 days, and $50,000 became zero. I couldn't stand it. I was everywhere telling people to get away from SOES trading, SOES, small order execution system. You don't even hear that anymore. I badmouth it so much that literally millions of people to stay away from that kind of trading. Right? It's just not good. Well, what is good? What does work? Well, let's get to it. Okay, so if you turn over to what page are we on? 3, 4? Page 4. I'm going to give you a real example right now, right here. Right? This is example, by the way, that's going to be in our TDT tomorrow. There is your question, right? Is what would this be worth it to you? If I could show you how to make $1,000, $2,000, $3,000 every Thursday, now you have to do the deal and or not, work it out with your broker. But let me give you an example. Here's a stock, Mankind, MANNKIND. The ticker symbol is MNKD, right? The stock was at $5.55. Okay, $5.55. Now, you look out in a month, a little over a month from right now, all right, and you look at the $5.50 calls. The $5.50 calls were going for 75 cents to sell. Okay, so let's look at that. So up until now, I've been talking about buying an option. Let's not go there. Let's go to the other side of that equation, the other side of that coin, and let's sell the option. Let's sell it. All right, we have 1,000 shares, let's say, so we could sell 10 contracts. Right? Well, 1,000 times 75 cents is $750. Pause. Time out. Cool your jets. If you don't get really excited about that, you better check your vitamin dosage, because that is really exciting. You tell me where you buy a stock for $5.55, and for like 6 weeks or so, 5.5, 6 weeks, you give someone the right to buy your stock at $5.50. Yes, you'll lose a nickel, but we're not in this to make money off of the stock. We're not in this for the long-term hold on the stock. We're in this for cash flow purposes only, right? We take in $700, and I'm not done yet. We take in $750. What? Do you realize that the marketplace out there, somebody, Tallahassee, Florida, those are crazy people down there, right? They're willing to pay you $750, and you get that money in one day. In one day, you can have $750 in your account for someone the right to buy your stock at $5.50. So you lose a nickel. A nickel times 1,000, right, would be $50. So you make $700. What if you could make on $5,500. What if you can make $750 at the end of the month, right? You still have your money, you have all your cash back in, or you still own the stock, and you have $750. And I'm not done. I don't want to spend the whole night talking about every little intricacy of doing this. But you know that if you put up $5,000 to buy the stock, $5,550 on margin, which is a form of debt, but you can buy 2,000 shares of this stock. So instead of selling 10 contracts, you could sell 20 contracts. You could take in $1,500 cash right now on your $5,500 cash that you have invested in this stock. Now, you got some decisions to make here. This is margin. It is a form of debt, so you want to be very, very leery of this, and you don't want to tie up all your money in margin type investing. But you just took in $1,500, even if you only make $1,400 if you have to give back that nickel, right? What if you could make $1,400 a month off of $5,000? My goodness, think of that. Think of that. $50,000 would generate for you $14,000 a month. So when I see this guy on TV, one of my old students, saying, well, I've got $400,000 and I'm making $50,000 a month, get his book, read it. See if I did a good job teaching him. Because guess what he's doing? He's showing people how to do weekly options now. And that's how he's making that much money. It is so much fun. I'm going to get to those right down here in this next box. Some people, I don't know about you, some people look at these numbers. That's all they see is numbers. Oh, I don't get it. I don't understand arithmetic. I don't understand the mathematics. Other people see these numbers and they say, honey, book the cruise. We're out of here. I see our way that we can retire better. We can take this every month. In 6 or 7 months, we can pay off all of our bills, right? With this kind of money, if we scrape together a little bit more, we could be generating $3,000, $4,000, $5,000, $6,000 a month, and we can live in kind of retirement that we want. Very exciting. Work this through with your broker. We're educators. We get nothing out of what you do. You haven't heard me here tonight say that we're going to sell you any investments. We don't do that. You know, I'll give you a few little motivational tips every now and then, but if you need a motivational seminar, you go to somebody else's, because that's not who we are. We are deal people. We do deals. We do real deals. We bill it out as a brand new deal every week. How much would that be worth to you to learn how to do a deal like this every week? So all of our members, and we have a lot of them, all of our members are going to get this deal tomorrow morning. Pretty exciting, huh? And by the way, we've done this, Mankind. I've done this for, I'm going to say 10, 12 years on and off over the years. But the last year or so, we've done this quite a few times, right? This again is our $1,000 Thursday. Now, so I taught you margin. I taught you selling a call, not buying a call. And so let's finish that up, by the way. Let's go down the road. Let's get down to November, third Friday of November on the expiration date. Y'all see that the $5.50 strike price is right here. This stock at that point in time is going to be above 550 or it's going to be below 550. If it lands right at 550, you know, that'd be really cool, but it's not going to happen. 551, 650, 475, whatever. Right, that stock is going to be around there. So here's the point. If it's at 550 or above, you're going to get called out. There are some protective strategies that we can use. You're going to get called out, which means you're going to sell this stock. Well, what do you have in your account? You have back in your account the $5,500, right? What if you don't get called out? What if the stock's at 540, right? Nobody's going to buy your stock at 540 if they can, you know, they're not going to do it. Well, they would, but they're not going to buy it at 550 if they can buy it in the open market at 540. They're not going to do it. So expiration comes and goes that third Friday. What's in your account? On Monday, what is still in your account? This stock. And you could do it again for December and then do it for January. What if you could take this kind of money and make, I don't know, $1,200, $1,400 every month, maybe $900 in December. I don't know. But isn't that the beauty of this thing? You know, if you know how much you're going to make, you're not going to make very much, right? There's got to be an air of uncertainty, but we've taken most of the uncertainty out of this because before you ever go into this trade, before you ever do that, you can measure the results. Now, it may, the only variable here, by the way, is the stock going up or down in value. But the amount you paid for it today, that's set. The amount you're going to get today and the money hits your account in one day, that is set. You can determine all that before you ever go into the trade, right? And I'm going to show you one in just a minute if we got time on Groupon and all that. All right, but let's talk now. Let's move this conversation along because it's getting late. The stock market over the last year or two has really done us a good job. They have given us two gifts that are phenomenal. Now, believe me, for someone who's done 29,000 trades, this what I'm going to show you is very, very exciting. If you don't get it, I'm not asking you to trust me. My dad taught me when I was young, if somebody asks you to trust them, get out of their gunshot range. I'm not asking you to trust me. I'm asking you to think it through, right? It used to be when we had a stock like this that we would have options. So a $5 stock, we would have $2.50 options. The next strike price was $5. The next strike price was $7.50 and then $10. If that stock was at $5.50, it'd be right here. Well, that's kind of really close to the $5. That's pretty cool. Clear up to the $7.50, if I want to sell those, there's not very much there, right? Because it's too far away. So a couple years ago, they changed all these. They went to $2, $3, $4, $5, $6. They turned everything into $1 strike prices. And by the way, that's not on every stock. There's still a whole bunch of stocks out there that have this old cadre of strike prices, right? And they're really hard. They're cumbersome to work with, right? So they came out in dollar increments. But what happened last couple of years? They came out with 50-cent increments. There's your key, 50 cents. That is so exciting. And watch, now you have the 2s, the 250s, the 3s, the 350s, the 4s, the 450s, the 5s, the 550s, in 50-cent incremental strike prices. Now, for doing spreads, we can now sell the 350, buy the 4, right? There's 50-cent incremental strike prices. That is exciting. That gives us more opportunities. That gives us a chance to do trades that we probably wouldn't do if they had these $2.50 incremental strike prices or even the $1 incremental strike prices. Because see, you wouldn't have that 550. See right there, we sold the 550 calls. We had a nice chunk of change. Well, we could have sold the $5 calls or even the 6s. They would have been more, but that would have been, a lot of that would have been in the money, or the 6s that would have been out of the money. We can sell near the money with these strike prices. That is fun. The other gift that we got was they now do options pretty much every Friday. Not on all stocks, but on, I don't even know if it's half the stocks, but there's enough stocks out there that have expiration dates every Friday. Now, what does this mean? Okay, I'm going to take that piece of paper down. I still want to save the next box on the next page for doing a deal. I got a couple deals to do over there. But I want to show you what we're doing. We now call this writing covered calls, and we put a W after it. All right, here's what we've done. This is the weekly, doing weekly options. Okay, let's go back to this one right here on, I think I've got, oh, I didn't bring it in here with me. All right, I'm just going to do this from memory. All right, I'm going to show you something. This is on the same Mankind. Okay, we take our benchmark. We get the stock at 550. We sell the $5 call, and we sell it out, or I'm sorry, the 550 call. We sell it out for like a month or two or 6 or 7 or 8 weeks, right? And we're going to get, in this example, $750. Okay, this is what we call our benchmark. Our benchmark. The question is, can we beat that? Can we make more money than that? So what would we have to do? Well, instead of selling 1 month or 6 or 7 weeks, we start selling these options on a weekly basis. We started this trade at $5, the strike price, but then at $5.50. Okay, $5.50 for when, right? Well, for this Friday, for 10/13. And then the $5.50 calls for 10/20. and then 10.27, 11.3, 11.10, and then the 11.17. So there's your third Friday. This is the same as this one up here. The third Friday expiration date, right, which was $750. There's our benchmark again, and what we're going to see if we can beat that. So we looked at these. We looked at the bids. You know, there's the bid and the ask. We sell at the bid. We looked at the bids all the way down. This one, this one, this one, this one, this one. I almost don't want to tell you what they added up to, right? What they added up to, all of these right here for these 6 or 7 weeks, they added up to $3,500. Well, we know we're not going to get that. I'm going to write it down as a point of reference, because as we get down each week, the time is going to deteriorate. You know, that's what happens with options. And we're going to end up with probably about half of that amount. So we're going to end up with about $1,700. The other way that we figure this, and this is real world now, I've got page after page of ones that we're actually doing. Here's Groupon, and you see that we're doing these trades and what it could have been and what we're actually doing. This is on Chesapeake Energy, Chesapeake Petroleum, I think it is, right? We got this stock at $3.94, and we're selling the $4 calls, right? I'm going to show you this one real fast. We've got the $2.50, and by the way, these numbers are on your next page, right? If you want to put it in where it says another trade time permitting, right? You'll see that I've got Groupon and Chesapeake here. Okay, with let's just stick with this for just a second. With Chesapeake, you know, I've got the numbers there if you want to see them, right? The $4 calls out several weeks were $2.50. These were for 10/20 next week. The $2, we've been doing this now for a month. We've been doing a lot of these, and man, I'm telling you, they don't all work exactly like this, but I'll tell you what we're getting. We're getting about, it takes more work, it takes an extra 15 or 20 minutes a week, right, for each one of these. We're getting about 2 times what we would have gotten. So for example, on this one here, our benchmark was $250. We've already taken in $330 over the last 3 or 4 weeks. We figure that next week, because you know the stock's right around there, that we're going to take in about another $180, $200, right? So we're going to net on this one about $530. Well, there you go. What are you thinking? So if I could show you how to take you know $3,900 or half of that, $1,800, $1,900, and make $250 a month, right? Well, what if that same investment, that same amount of money you have into the stock would make you $530? Well, here's Chesapeake right here. Okay, and by the way, I skipped a week. All right, we've taken in 60, we've taken in 130. I didn't do a trade there, I just forgot, right? I've taken in 80 and 60. So you add all that up and it's $330 plus another 180 or 200, right? These are real deals. These are real numbers. I'm not going to teach an XYZ stock. We have CHK, Chesapeake Hardware, Chesapeake Petroleum, right? Did the same thing with Groupon, right? And by the way, when you get to be a member, all of these postings will be done either on the TDT or on our taxi cab, right? Where people can get on every day. And I'm doing these trades on our Facebook site, right? But here's the question, right? The question, and by the way, you have on your outline tonight, you have a blank tracking sheet. So you can just follow through. I've got everything here for you. All you've got to do is put in your strike price right there. I'm sorry, your ticker symbol, and do the stock, and you can see. Then we take whatever the bid add up to, we take it in half, or we double the benchmark there, and we're going to make about double that. And it's proving out in real life. With deal after deal after deal that we're doing, it is proving out. So do these weeklies make us more money? The answer is emphatically yes. Right? They're pretty darn amazing, right? And we're doing really, really well with this. And we invite you to come along. We invite you to learn, to grow, and grow out of your problems as we keep teaching, right? Well, here's a question I have for you. I'm going to tell you about our deal, and I hope that you get registered tonight. Get signed up tonight, because we got a real special right now for all of you new people, all of you new members, right? Here's my $100,000 question. As I go around the country, I teach a seminar. As I teach seminars, I say, how many of you want to make over $100,000 a year? And hands go up all over the audience. If you really want to make $100 grand a year, Why are you talking to anybody about making money who's making under $100,000 a year? To whom are you listening? Where are you going? Right? So in the boxing ring of life, when you turn around and you look at who's in your corner, well, who do you have in your corner? Who do you have back there? I'm not pitching for it. Well, I kind of am, but I'm busy. But I'm busy helping people, right? Yes, any of our students, I'll be as helpful as I can. I'll stick with you until you make it, right? That's what I do. Guys, I don't really want to travel anymore. I love my life so much. I've got 5 beautiful kids. I got 10 incredibly beautiful great grandkids. I like being Papa Wade. I like being home, right? And to whom are you listening? Well, if you're going to come down this road with us, let me show you what you're going to get. We have a service. If you turn over to page 7, we have a service called the Win Combo, the TDT. The TDT is our flagship service. It is a service that we charge $197 a month. And right now we're knocking that down to $97. And we're going to throw in the kitchen sink because we don't want you to say no. You have a couple choices right now, right? You're watching this webinar, and you have a choice. You're going down this road, and you can say, yes, I'm going to participate, or you can say no. All right? Those are your 2 choices. No, whatever your finances are, you're on your own. If you put a powerful grouping of forces behind you, we not only teach you how to use the market forces and sell those and make money, but we have the education. Again, you learn, you earn. We get nothing out of what you do. We're pure educators, right? So right now we have our paid to trade. By the way, this right here, paid to trade, is probably our most popular item that we sell. It's hard to put a value on it, but this is a 200-page manual that had its basis in the Wall Street Workshop, the one where we charge $4,295. There's the manual right there. And almost all the time, man, that's paid to trade is great. Well, we're including paid to trade for free. It's included with Trail. I don't know how to put a value on Trail. If I had to, I'd probably put $25,000 to $35,000 because I know the value of education. There are close to 500 postings in Trail, all archived, right? Question after question, deal after deal, trade after trade that you can read and study at your leisure. You can go right to the ones you want. If you want spreads, if you want writing covered calls, if you want weekly covered calls, you go right there and find it. And we also have Taxi, which is basically $47 a month, but that's included. This is included, and this is included. We also have a whole new package. This is called our VIM package, our Video Instruction Medley. We have the TNTs. We've been doing about 2 a month. We have the Wednesdays with Wade, or these kinds of events like you're attending right now. And we have the EFIT. This is an awesome event. Matter of fact, there's one coming up next Friday. On the expiration Friday, the 3rd Friday of each month, we get together at 9 a.m. when the market is open, 9 a.m. Pacific time, and we wind out of deals. We do deals. We figure out if we're going to get called out or not and how to buy back the option, whether we should buy back the option. And now that we've added weekly covered calls, this 3rd Friday, we ought to be doing these every Friday, but that's a little bit too much work, right? But it's called Expiration Friday Investment Training. And I love them. We got a lot of people attend. They're fun. They're exciting, right? And so instead of charging $245 here and $300 there, we just decided how much can we include with the $97? So we included the TNT. We included the Wednesdays with Wade, or the Winning Ways. We included the EFIT. It's all there. Everything is there for the one price. And I want to tell you something. I want to tell you what one of my goals is. One of my goals, one of my desires to do is to make sure that anytime anybody gives me $1, I love the Bible. They talk about the 100-fold return. I like that. I can't make the same promises that the prophets made or that God made, but I can do this. You pay $97, I want to give you $9,700 in trades back every month. We usually do 2 or 3 or 4 or 5,000 every Thursday. We'll take that times 4 Thursdays. You know, so it's $97. I want to show you about $10,000 in trades every month. Every month, right? That's my promise to you. All right. I appreciate you being here. I appreciate you watching, right? Brandon's going to put up a link right now. If you're interested in this, getting the special pricing tonight, getting everything that we've included here, you can read my statement here at the end. But if you want to get this $97 a month, you can quote whenever you want, right? You're going to get the manual, the pay to trade. You're going to, I don't know if we can get them in there, Brandon, tonight so they get the TDT tomorrow, but we'll see what we can do.
They
right?
get signed up.
If you get signed up tonight, you're going to get TDT. So about 6:30 Pacific time tomorrow, you turn on your computer and you go there, boom, all of a sudden you got the link and you go there and you're going to have the trades tomorrow. You're going to have the full explanation, by the way, of that Mankind trade. All right. So we'd love to have you join us. We're a bunch of good looking, fun loving people. And we'd love to have you be part of our win combo. So that's what it is. Everything for the $97 a month. And we'd love to have you be part. Take part, and seriously grow out of your problems. This has been Wade Cook with the WIN staff. We appreciate you being here. We'll see you later. Do you want to see if anybody has any questions? Does anybody have any questions? Did I get that in under an hour?